Right now, the crypto market is going through a very important phase, especially for XRP holders. There is a lot of noise, a lot of confusion, and many people are reacting based on emotions instead of facts. Big players, also known as institutions, are slowly positioning themselves while retail investors are either panicking or losing patience. This kind of situation has happened before in crypto, where only a small number of people truly understand what is coming next, while the majority end up making the wrong moves at the wrong time. XRP is now at a point where decisions made today can decide who benefits in the future and who gets left behind. In today's video, we are going to break down why only a small percentage of XRP holders might actually succeed in the coming phase, while the majority could end up losing their positions. We will look at market behavior, investor psychology, and what is really happening behind the scenes that most people are ignoring. This is not about fear. This is about understanding the reality of how markets work and why patience and strategy matter more than hype. What if I told you that the biggest mistake most XRP holders will make is not selling too late, but selling too early? What if the real move hasn't even started yet, and the market is designed to shake out as many people as possible before it does? Right now, there is a silent shift happening, and only those who understand it will stay in the game. The question is simple. Will you be part of the 1% who hold strong or the 99% who get pushed out? Welcome back to XRP On Moon, your go-to place for simple and clear XRP updates. If you want to stay ahead and understand what's really going on in the XRP world, you're in the right place. Let's start by understanding one simple truth about markets. Markets are not designed to reward everyone. If everyone made money easily, then there would be no real opportunity. The market works by testing people's patience, emotions, and beliefs, and right now, XRP holders are being tested in all three areas. Most people enter the market with excitement. They hear about big gains, they see price predictions, and they expect fast results. But when the market slows down or moves sideways, doubt starts to grow. People begin to question their decisions. They start comparing XRP with other coins that are moving faster, and slowly confidence turns into frustration. This is exactly where the majority starts to make mistakes. Instead of sticking to a clear plan, they react to short-term movements. A small drop in price feels like a big loss, and a small pump feels like a reason to sell. This emotional cycle keeps repeating, and over time, it pushes people out of their positions. Now, here's the interesting part. While retail investors are going through this emotional cycle, institutions are doing the opposite. They are not reacting to every price move. They are not panicking. Instead, they are quietly accumulating, building positions over time while the market is uncertain. This difference in behavior is what separates the 1% from the 99%. The 1% understands that real gains take time. They are not focused on daily price changes. They are focused on the bigger picture. They know that before any major move, there is usually a period of doubt and boredom in the market. Another important factor is information. Most people rely on headlines, social media posts, and random opinions, but these sources are often driven by hype or fear. The smart investors look deeper. They pay attention to real developments, long-term trends, and market structure. Right now, XRP is in a phase where nothing feels exciting, and that is exactly why it is important, because historically, the biggest moves happen when the market feels quiet and uncertain. This is the phase where positions are built, not where hype is created. So the real question is not whether XRP will move or not. The real question is whether people will still be holding when it does. One of the biggest things happening in the XRP market is not price movement itself, but investor behavior. Most people are not losing money because XRP is going down in a dramatic way. They are losing because they are unable to stay consistent with their plan. When the market becomes slow or uncertain, patience starts to break, and that is where decisions become emotional instead of logical. The crypto market is known for doing one thing very well, shaking people out before major moves. It doesn't move in a straight line, and it doesn't reward impatience. Instead, it creates long periods where nothing seems to happen, and during that time, most investors start to feel disappointed. This is where doubt slowly enters the picture. People begin to think that maybe the opportunity is gone, or maybe they were wrong from the beginning. But this is exactly the phase where the majority makes their biggest mistake. They start exiting positions not because of real damage in fundamentals, but because of time pressure and emotional fatigue. When nothing happens quickly, they assume nothing will happen at all. This thinking is what separates experienced market participants from beginners. On the other side, the smarter players in the market behave differently. They understand that silence in the market does not mean weakness. It often means preparation. Large investors and institutions do not chase excitement. They accumulate quietly during uncertainty because they know that market cycles reward patience, not reaction. Another important point is how information affects decision making. Today, people are constantly exposed to predictions, opinions, and extreme headlines. Some sources create fear, while others create unrealistic excitement. Both of these extremes push people into bad decisions. When someone is constantly exposed to emotional content, it becomes harder to think clearly and stick to a long-term plan. In XRP specifically, this phase is very important because many holders are expecting fast outcomes. When those expectations are not met immediately, frustration builds, and frustration leads to action, often the wrong kind of action. People start selling, not because of fundamentals, but because they feel stuck or bored. This is where the idea of only 1% surviving starts to make sense. It is not about intelligence or experience alone. It is about emotional control. The market repeatedly tests the same weakness in most participants: impatience. In every cycle, a large number of people fail that test. Meanwhile, those who understand the cycle stay focused on structure instead of emotion. They zoom out instead of zooming in. They stop reacting to every small move and start observing broader patterns. They understand that accumulation phases are not meant to be exciting. They are meant to build positions quietly before attention returns. At this stage, nothing feels certain for the average investor. But uncertainty is not always a negative signal. In fact, in many past cycles, uncertainty has been the foundation of the next major move. When confidence is low and sentiment is mixed, that is often when smart money becomes most active. So while most of the market is waiting for confirmation, the real positioning often happens before any confirmation appears, and by the time things look obvious to everyone, it is usually already too late for most participants to take advantage of it. What most XRP holders don't realize is that markets are not only driven by news or technology, but heavily driven by timing and human behavior. Even when the fundamentals stay the same, the way people react to those fundamentals changes completely depending on market conditions. This is why the same asset can feel extremely exciting at one time and completely disappointing at another, even without any major change in its core value. Right now, XRP is in a phase where confusion plays a bigger role than clarity. People are constantly trying to find confirmation for what they already believe. If someone is bullish, they look for bullish news. If someone is bearish, they focus only on negative signals. This creates a divided mindset across the community, and that division is actually a normal part of every major market cycle. But here's the important part: markets do not move because everyone agrees. In fact, major moves often begin when there is disagreement and uncertainty. When opinions are split, it usually means positioning is still not complete. That is why the current phase feels slow and frustrating for many participants. The market is not designed to give clarity too early. It develops clarity only after most weak hands are already removed. Another key factor is liquidity. Large movements in any asset require liquidity to enter and exit positions efficiently. That liquidity is usually provided by retail traders reacting emotionally. When people panic sell, they provide liquidity. When people FOMO buy, they also provide liquidity. This constant cycle allows bigger players to build or exit positions over time. In XRP's case, this creates a repeating pattern where price action does not immediately reflect expectations. Instead, it moves in ways that shake confidence first. This is why many traders feel like the market is not making sense. But in reality, it is following a structure that prioritizes accumulation and distribution, not emotional satisfaction. At this stage, one of the biggest mistakes investors make is expecting immediate results from long-term setups. When they don't see fast movement, they assume something is wrong. But in many cases, nothing is wrong. The market is simply not ready yet. And readiness in markets is not defined by time. It is defined by positioning. Another overlooked factor is patience compression. The longer the market stays quiet, the more pressure builds on participants. That pressure eventually forces decisions. Some people exit because they can't wait anymore. Others enter too early because they think they are missing out. Both reactions are emotional, and both can lead to poor timing. The small group that eventually benefits the most are the ones who remove emotion from the process. They do not treat every phase as a signal to act. Instead, they treat it as information to observe. They understand that markets reward endurance, not urgency. So while many are trying to predict the exact moment of movement, the more important focus is understanding that major moves are rarely obvious before they happen. They build quietly, they test patience, and they remove weak conviction before expanding in visibility. And this is why, historically, only a small percentage manage to stay positioned correctly when the real expansion phase begins. One of the most important things to understand about XRP right now is that the market is not simply moving randomly. It is following a cycle of accumulation, pressure, and eventual expansion. Most participants only see the surface-level price action, But the deeper structure is what really matters. And in this structure, time plays a bigger role than most people expect. When a market stays in a slow phase for a long time, something very important starts to happen mentally for investors. Their conviction begins to weaken, even if they originally had strong belief in the asset. This does not happen because the asset has changed, but because human psychology struggles with waiting and uncertainty. This is where the majority slowly starts to lose alignment with their original plan. At the same time, another group becomes more active during these quiet phases. These are the participants who understand that accumulation does not happen during excitement. It happens during silence. They are not reacting to headlines or short-term sentiment. Instead, they are focused on positioning during periods when most people are not paying attention. This difference in behavior creates a natural separation in the market. On one side, there are those who need constant movement to stay confident. On the other side, there are those who understand that lack of movement is also a form of information. It often signals that the market is preparing rather than failing. In XRP's situation, this is especially important because expectations are already very high in the community. When expectations are high but immediate results are not visible, disappointment starts to grow. That disappointment is what causes many people to exit too early or reduce their exposure before any major shift happens. But the market does not operate based on emotional timelines. It operates on structural completion. That means certain conditions must be met before a strong move can occur. These conditions are not always visible to the public, but they develop quietly over time. Another factor that plays a major role here is conviction strength. Conviction is not tested during uptrends. It is tested during periods of uncertainty. When price is moving up, everyone feels confident. But when price is moving sideways or feels stagnant, that is when true belief is tested. This is why many experienced market participants often say that the hardest money to make is during the waiting phase. Not because there is no opportunity, but because patience becomes the main requirement. And patience is something most people underestimate in trading and investing. During this phase, many investors also fall into the trap of overanalyzing every small movement. They try to find meaning in short-term fluctuations, even when those movements are just noise within a larger structure. This leads to confusion, and confusion leads to emotional decisions. Meanwhile, larger market players are not focused on short-term noise. They are focused on long-term structure. Their activity is not visible in obvious ways, but it is reflected in how the market behaves over time. Slow absorption, controlled movement, and lack of aggressive trends are often signs of positioning rather than weakness. So while many participants are waiting for immediate confirmation, the actual market structure is often building in the background. And by the time confirmation becomes obvious, the most strategic phases are usually already completed. This is why understanding timing and behavior is far more important than reacting to every price change. Because in the end, the market rewards those who stay aligned with structure, not those who chase constant movement. It is important to bring everything together and understand what this entire XRP situation really means for holders. The key idea is not about fear or hype, but about understanding how market cycles naturally work. Every major crypto asset goes through phases where most participants are tested and only a smaller group manages to stay aligned with the long-term direction. What we are seeing around XRP right now is a classic phase where patience becomes the main deciding factor. This is not the phase where the biggest excitement is usually seen. Instead, it is the phase where the foundation is being built quietly. And in most cycles, this is also the phase where the majority starts to lose interest or confidence. The reason this happens is simple. Human psychology is not built to handle long uncertainty without visible progress. When people invest, they expect movement. They expect validation in a short time, but markets do not operate on personal timelines. They operate on cycles that often take longer than expected to fully develop. This mismatch between expectation and reality is where most investors struggle. They enter with strong belief, but over time, as the market remains slow or unclear, that belief starts to weaken. And once belief weakens, decisions start to become reactive instead of planned. This is usually where positions are reduced or exited completely. On the other side, the participants who understand cycles behave differently. They do not rely on daily movement to confirm their thesis. Instead, they rely on long-term structure and historical behavior. They know that major market moves rarely happen when everything feels obvious. They happen when most people are uncertain or distracted. This is why the idea of only a small percentage making it in a cycle makes sense. It is not because the opportunity is hidden, but because most people cannot stay consistent through the full process. The market does not remove people quickly. It removes them slowly through time, pressure, and uncertainty. In XRP's case, the current environment is shaping a clear division. One group is becoming impatient and reacting to short-term conditions. The other group is staying focused on long-term positioning and ignoring temporary noise. This division is what eventually leads to a strong directional phase in the market. It is also important to understand that major moves are rarely built on excitement alone. They are built after periods of quiet accumulation where attention is low and sentiment is mixed. This is when positions are formed in the background before any visible expansion begins. So while many are waiting for confirmation or clear signals, the reality is that the market often moves before confirmation becomes obvious. By the time things look certain to the majority, the early stages of opportunity have already passed. This is why timing, patience, and emotional control matter more than constant action. The biggest challenge is not finding the opportunity, but staying in position long enough to benefit from it. This video is for educational and informational purposes only. It is not financial, investment, or trading advice. Always do your own research before making any financial decisions. Cryptocurrency markets are highly risky, and you may lose your entire investment. If you found value in this breakdown, don't forget to like this video and subscribe to XRP On Moon for more simple and clear XRP updates.